Let's talk consumers and FMCG now. To help us do that, we've got someone who needs actually no introduction. Milind Sarwate is founder and CEO, Increate Value Advisors LLP. He's joining me here in our studios. Mr. Sarwate was with Marico for 16 years. He stepped down in March of 2014. So it's been almost nearly to the date 2 years since he's been out of Marico. And he's set up this company, Increate Value Advisors. Mr. Sarwate, it's a pleasure to speak with you again. Thanks very much for your time. And thanks for joining us. First up, could you talk a little bit about the company, Increate Value Advisors? What does this do?
I realized during my career as a CFO that a lot of focus needs to be given to the value that a company can create, and that situation where untapped value exists and it is not really being tapped. It exists in several situations: a company wanting to go IPO, a company wanting to be acquired, or a company just feeling that its value is low. So the word Increate, actually the dictionary word, it means undiscovered or uncreated. So I felt that there should be some focus on this, and that's how I set up this practice. I also intend to do something in the social space, so both corporate value and the social value. And I find that my experience with FMCGs has been pretty useful. FMCG companies are built on brands which are classically intangible properties. And I seriously believe that the intangible property in an individual or a corporation is the key to building its value.
Just to clarify, so Increate essentially is a fund which will put money into so far undiscovered stories, or you're essentially advisors?
I have been doing some investments on a personal basis, but this really is not a fund, it's an advisory company. But in course of time, I don't know what will happen. I think in 2 years, I have turned entrepreneurial in my mind, so I'm open to all new discoveries.
All new discoveries. Why not a fund and some advisory?
Yes, right. Good idea actually. I should thank you for that.
So, very simple question. I'll get into specifics, and we have you on board. We want to talk about the impact Patanjali Ayurveda is having in the market. It's on everybody's minds, and fund managers kind of say, well, I hope it was listed, etc. So that's the kind of talk that we hear. But simple question, how is the consumer holding up? I'm talking about the FMCG consumer. How is he doing? How is he holding up? What's your assessment?
First of all, I feel that this was a space which was lying, so to say, unexplored. Yes, there were companies which brought in natural, Ayurvedic or herbal products, but there was nobody who could claim that speciality or differentiation. I feel Baba Ramdev, with his rich pedigree of yoga himself, I mean, he used to be on TV every morning, so his saliency was very high, and his individual credibility as a yogi somewhere got rubbed onto the brand. He has also been smart. He has chosen a brand not linked to his name. Patanjali is it's a school of thought in Ayurveda, so he has chosen a good name. Most importantly, I feel that he has exploited a niche which I would call the Divine Connect niche. I would call him a DC brand, a Divine Connect brand. I think he has been able to put together the whole space of herbal, natural, Ayurvedic, something which is not Western and yet is as effective as any of the Western MNC's products in India. Himalaya did try to do this earlier, but Himalaya has somewhere not been able to exploit this as a brand. So I think Patanjali's success, first of all, lies in marshalling everything together. The second factor in success is probably the huge scaling up that he has got. I think in FY15, his turnover was around 2,000 crore probably. This year he is targeting 5,000 to 6,000 crore. This year as in FY16, which means that he has arrived, because that's the scale at which the Godrejas and the Maricos and the Imamis of the world are operating. And how has this been possible? I feel that like it happens in every new fad or new idea, there comes a tipping point somewhere, and to my mind the tipping point for Patanjali has been the urban acceptance that it has got. I mean, one could understand if, so to say, a pure Ayurvedic or Desi product would gain acceptance in the cow belt, but when it starts gaining acceptance in the cities, urban centers, I think it makes a difference. And to that,
to your mind, Patanjali has rural acceptance first or urban acceptance first? Or do you think it is both now?
I feel that for an ancient concept to be recycled and brought into the modern world, first of all, I feel it got sold to the masses. Need not be necessarily rural, but in SEC classification, maybe SEC C and D, where convincing that population was relatively easier, because it's a mass product, sold cheap, 20 to 30% cheap than the rest of the products. But once they have been rebranded, repacked, etc., and made more respectable, I find people in urban areas initially not open to the idea of buying a Patanjali product, then saying that if so many people are buying, there must be something in it, then actually buying. And if you look at it in FMCG products, the differentiation is largely in the brand space. In terms of manufacturing technology, entry barriers are low. And I don't think there is rocket science in any of the FMCG products. If you take his ghee, for example, it's like any other company's ghee. It's not really dramatically different. But I feel...
But it's the perception, right?
It is the perception.
I mean, as you said, it's got the DC advantage.
Yes, I feel people must be thinking somewhere that here is a yogi. There must be something in it which makes it click. Why not try it out?
A lot of the advertising is also done that way, right? I mean, the last advert that I saw from Patanjali was about the toothpaste.
Yes.
So there were, men in white clothes, the regular toothpaste type commercial that we see.
Yes.
And the Patanjali ad showed someone actually taking off the white doctor's shirt, throwing it away, and then sort of, so they're trying to reach out in a different way as well.
They are trying to reach out.
I
think they have realized that their differentiation lies in their being in and around the Ayurveda, yoga space, and I think they are exploiting it really well. And to some extent, there is a wisdom in the ancient Indian sciences. For example, I used to hear about a charcoal-based tooth powder in my younger days. The same concept has come back through Colgate charcoal-based toothpaste. So there is something, it needs to be presented much better, and I feel he has succeeded in that. I would think that his marketing sense has been...
One thing I constantly hear is that they don't have that much distribution, right? I mean, marketing spends, etc., are very low, and that will increase, of course, going forward. So obviously, large number of followers, right? I mean, existing base of followers, supporters, to kind of accept the product first and then kind of spread that. That has worked very well. Would you agree?
Yes, I feel that their base was large and they've been able to exploit that to quickly ramp up sales. But I think going forward, he would meet challenges of execution because it's not easy to sustain distribution. There are real life issues in FMCG distribution. You need to have systems and processes. Otherwise, the top line of 5,000-6,000 crores would actually mean nothing for a company. So I think he would meet those challenges. Again, it's a matter of debate whether you need a certain kind of talent or a different kind of talent can run the ship. If you look at the talent, for example, which is there in Amul, it would be very different from the talent which is there in, say, Hindustan Unilever. But Amul has still been successful. So there are different ways of going to Rome. So and this fellow doesn't even want to go to Rome. So he wants to be in India all the time. So I think he will have to crack that management.
What about pricing? I mean, the prices you yourself said are 20-30% cheaper, right? Compared to competition in each of the categories, be it personal care, oral, foods, hair care. How is one doing that, you think, in your experience?
To my mind,
that is largely a function of lesser spend, marketing, ad spends, etc.
True, because a typical FMCG company would spend anywhere between 10 to 14% on marketing. He may be spending less, maybe 8%. He would spend much less on manpower cost. Maybe he's spending 2-3% on manpower cost as compared to 6 or 7%, which a typical FMCG would spend. I feel he must have taken an approach of what is known as a challenge pricing or a challenge costing. That this is the price at which I want to sell, and now we need to get products made at a cost lower than this. So I think that challenge seems to be working. I don't know how consistently and how persistently he will be able to maintain the costing. I feel to some extent the overall commodity price cycle being low, that has also helped him situationally. And I also feel that his profit expectation per se may be lower. There is also there is also a theory that if you don't run your business too scientifically, you don't really have a very precise idea of how much money you are making. So he may be thinking that he makes a certain amount of money. And sometimes, as Dilbert says, management is injurious to business. So
Can you explain that point though? I mean, if you don't run the business scientifically, you're not sure of the numbers.
Many times, when you over sophisticate your calculations, you do not take some of the business opportunities that are available. If you overthink about,
that's fine. But I'm saying the first point that you made, that you might not be making as much money as you think you're making. I think that's the point you were making.
Yes.
How is that possible?
Because different companies measure profitability differently. The right way to measure profitability is actually your cash profit, how much comes into the kitty. And if you do not have sophisticated systems, sometimes you may measure in a very, very broad and crude manner. And maybe that enables you to take better decisions sometimes.
Now, are the incumbents, I mean, Patanjali has already overtaken companies like Imami, Jyoti Labs, etc. If they do 5,000 crores of revenues in financial year 16, they would surpass Colgate, GSK Consumer and be broadly similar to Marico in financial year 16. Now, this is some really fast-paced growth. My question, is the industry underestimating the impact, the dent that Patanjali can make, is making? Or you think it is correctly estimating the impact, the competition?
I would answer this in two buckets. Bucket one is, if you go by the sheer turnover size, yes, he has arrived, he is into the league now. And there is no room to believe that these numbers are wrong. They would be, even if they are wrong by even 500 crores, he is still very large. But as they say, turnover is vanity, profits is sanity, and cash is reality. So it depends on how smartly he is able to run the business on a sustained basis. So if you compare Patanjali with Colgate and Imami of the world, at turnover level it's fine, but in terms of the value that Imami or Colgate is creating on the stock market, I think that value comes not only from turnover but from several other things, which I believe Patanjali currently lacks. It would lack an institutional framework, it would lack a management structure. And I'm not saying that they need to necessarily recruit chartered accountants and MBAs. Whatever structure he has, he needs to organize it much better than what it is today. I feel that to some extent, even he may be, even the owners of Patanjali may be surprised by what has happened to their scale. I mean, he does have dreams of becoming India's largest FMCG company.
According to one report, this is a CLSA report, dated the 27th of November 2015, he's saying that he wants Patanjali to be bigger than HUL by 2020, becoming the largest consumer company in India. Now, these are, of course, big goals. Also, this view that, and Baba Ramdev has said many times, that MNCs are earning excess profits by charging higher prices, right? Which needs to correct.
Yes, so he's clearly taking a stance that I would charge only a smaller profit, but I'll do it on a much larger scale. So the overall quantum of profits he earns is going to be larger. I think it's sensible logic. All I'm saying is that for him to sustain all this through till 2020, I think it will require some kind of a structure. I mean, there is obviously, if I look at myself as a risk manager, I would say there is a big key man risk. I mean, Baba Ramdev is the only person who is driving the value in this company. So what else? Who else will drive it? What's his succession plan? So I feel value doesn't get created only by turnover. It gets created by the offer and the promise of a sustained profit-making apparatus being there. And while the concept is good, so far executed well, what got done well at 2,000 crores, whether it gets done well at 10,000 crores, I have my doubts.
So I can read that to say that if Patanjali were to be listed tomorrow and you were managing public money, you would think hard before putting money into Patanjali.
No, I might put money, but I won't expect a PE of 35, which say Marico is getting. I would give it a much lower PE, and of course with a room for the PE to grow. So this is actually a great value play. You never expected Patanjali to ride up to 5% of the Indian FMCG sector. I mean, if you take a 1,20,000 crore FMCG market, at 5,000-6,000 crores, he's already 5% market share of the whole market, which is very big. And it has taken years for Colgate's, Marico and Imami to ramp up over there. So he has definitely done something different and very creditable.
So there is value, but
There
you're
is-
saying,
there
I mean,
is
at
value.
what price? So that
At
one-
what price?
that-
And it has to be built. There is
yeah.
need for a sustenance.
Yeah, fair enough. 5% and wants to get a lot bigger from here. Thanks very much for joining us, Mr. Sarwate. It's a
My
pleasure
pleasure,
joining you, and I hope that we can continue to chat more on various aspects as far as the FMCG sector is concerned. Very useful conversation today.
Thank you. My pleasure.